In this video, I'll be going over everything relating to order blocks. So without further ado, let's get straight into it. So in this diagram right here, I have a crude depiction of what an order block looks like for both a bearish scenario and a bullish scenario. So with a bearish scenario, we have two up close candles followed by an impulsive displacement to the downside. Similarly, for bullish order blocks, we have two down close candles, and it can be many down close candles. It can be more than two, or it can be a singular down close candle, or here it can be a single up close candle, right? So the main takeaway here is it's a series or single of up close candles or down close candles followed by a impulsive displacement or to the downside or to the upside. Okay, and then once we get that displacement below the opening price of the lowest up close candle or the highest down close candle, that is where we mark off our change in the state of delivery right there for a bearish order block, and right here for a bullish order block. Okay, so why is it called the change in the state of delivery? Because when we were going up in these two up close candles, we were delivering buy side delivery of price. However, once we go below this opening price, we have now changed the state of delivery to sell side delivery. Okay, that's why we call it change in the state of delivery. Similarly here, we were delivering price on the sell side, but then that delivery of price changes once we go above this opening price right there. Okay, where we start to deliver price on the buy side. That is why it is called the change in the state of delivery. And that is why we frame our entries of the opening price of a bullish order block or a bearish order block. Now you can also enter off of the low of a bearish order block or the high of a bullish order block. Now this comes down to preference. You can either enter off of the opening price of either a bullish order block or bearish order block, or off of the low or high respectively off of a bearish or bullish order block. This comes down to preference. However, me personally, I prefer to enter off of the opening price. Now I'm going to explain to you what is mean threshold. Mean threshold for a bearish order block is simply the midpoint of the two or singular or multiple series of up close candles. It is the midpoint of the series or singular of up close candles. Okay, and in this example here, from this low till that high, this is the midpoint, so this would be mean threshold of this bearish order block. Similarly here, we have these two down close candles here. From the high to the low, midpoint is here. This will be mean threshold for our bullish order block. I will get into examples and explain to you why the mean threshold is important for order blocks. Now guys, before we continue on with the video, I really quickly want to talk about my private mentorship. Now, if you made it this far into the video, you are definitely a serious trader, and I'm sure you really want to look to improve your trading skills. So when you join this mentorship, you will learn the exact model that I have taught to members, helping them all get 6 figures plus in funding and make 10k plus a month from trading consistently and quit their jobs for good. The mentorship will also include weekly trade breakdowns every Sunday at 7 PM GMT, where I'll host a Zoom call for all members, going over all the major forex pairs, indices, commodities. All calls are recorded. All of my trade ideas will be sent to the group live. Every trade that I take will be sent in real time. There's also a Discord community with 24/7 support, a bunch of trading psychology help, and how to be a part of the 10% of traders that win consistently. So now, if this sounds of interest to you, then I highly suggest you click the first link in the description. It's lifetime access for one-time payment only. It's currently on offer. It was previously $249.99. It's now $149.99 for a limited time only. Prices will soon be going back up, so I highly suggest you click the first link right away and join right now and take that first step towards financial independence. Okay guys, now I'm going to take you through some examples so you can get a better idea of what order blocks are. So in this example here, I have a chart of Nasdaq on the 5 minute. Here we can see that the price swept below this low here before pulling back into the range and having a displacement along with a market structure shift above this swing high right here. We will be using this down close candle after this move to the upside. And this validates an order block because we closed above this opening price right there. Right, so this is our bullish order block. I will extend the opening price out like this. And we'll be looking for this to support price to take out these highs here. So I will place my entry right at the opening price, place my stop loss at the low, and look to target these highs right there. So if I play price out, we get tagged right there. And we hit take profit right there. Okay, and as you guys can see, this down close candle here, we went above the opening price right there on this candle here. We then trade back down into this down close candle like so. Before moving up, we trade back down into a fair value gap here and an old high, and then we continue to the upside. Now I would want to see price supporting this down close candle here if we were to sustain a price move to the upside. So I will have my opening price drawn out like this and look to see price support us here. So if I play price out, we trade down and continue to the upside, failing to take out this low right there. Okay, and if you guys look, if I draw a fib out, what do you notice? From the high to the low, midpoint is mean threshold. The bodies are closing right at the mean threshold, indicating that we are bullish. Remember, the bodies tell the narrative and the storyline of price action, and the wicks do the damage. So this is indicating to us that price is bullish. Again, we have a series of down close candles followed by an explosive energetic displacement to the upside. I will then draw out my opening price and look to see price supporting this as a bullish order block. So if I play price out now, we continue to the upside as shown here. Okay, same thing, mean threshold. We will use that to indicate to us whether price is really bullish. And as you guys can see, a typical signature of price is that when we are bullish, we will close in the upper half of the order block. And as you guys can see, that's what we did. We did not close below 50%, indicating to us that we are in fact bullish. Now, another way the mean threshold is useful is that it can help us to increase our risk to reward. Say for example, I entered off of the opening price right here. Where would my stop loss have to be? Well, it would be at the low of the order block or this swing low here. And if I was looking to target this high here, that would be a 1.28 risk to reward. Now, if I look to enter off of the mean threshold, my risk to reward instantly increases to 2.46. Now this is much higher, and this is why I prefer to enter off of the mean threshold when we have a low risk to reward off of entering the opening price. Okay guys, now I will show you what a bearish order block will look like in actual price action. So as you guys can see, we have a swing high right here, which has buy side liquidity. And we will look for this to get traded into before seeing if price wants to displace lower, and we will look to target these relatively equal highs as a high probability draw on liquidity. So let's let price play out. And as you can see, we swept that high right there. Now, are we going to see a displacement? Let's find out. Okay, right there, we had a displacement to the downside, market structure shift below this swing low here. These series of consecutive up close candles will be our bearish order block that we will frame our trade off of once we got the confirmation of our displacement and market structure shift to the downside after sweeping this high right here. Now for entry purposes, if we were looking to enter off of the opening price right here, we would be entering like this, and our stop loss would be above this swing high right here or this high right here. Now as you guys can see, if we're looking to target these relatively equal lows, the risk to reward would be 1 to 1.33, and this is a very low risk to reward. So me personally, I would be looking to enter off of the mean threshold for a nice 1 to 3 risk to reward. So if I let price play out, let's see what happens. We get filled right there and smash TP. So hopefully you guys enjoyed this video. I tried to explain order blocks as simply as possible. If you guys have any questions, please leave it down in the comments below, and I'll see you again next time.